Alright, hey trader, here's today's market update for the 23rd of May 2012, and wow, what a move we've had. The last time I made a video, we were sitting nice upon this 1325 area where I was basically loading up on my shorts on this extension higher, and you can see the reversal we had, the overnight sell-off, and where we are right now, which we're breaking lows. I mentioned that the euro will be a key player in this move as we were testing this 126 level, and look how powerful this support has been. Now that we're breaking down the euro, that's a very bearish scenario for risk on assets. You can see this descending triangle that we're basically making on the longer term. So this breakdown in the euro should cause a wave of selling in risk on assets, in my opinion. I think that this is a strong break. Lots of reasons why it should be breaking. Um, and I think there's a lot more momentum to go. We could easily see the 120 on the euro. So the euro is down over 1% today, which is huge, 1.2. The yen is up 1%, showing the amount of fear in the markets. And the one of the biggest movers actually on the day today is the 30-year bond recovering from its yesterday's pullback. And you can see, like I mentioned in the previous video, it held nicely support this high we made last September. So this breakdown we're seeing in equity markets is kind of reminiscent to last year. Not saying that we're going to repeat last year, but it reminds me of it, as we are basically seeing the same type of action in global equity markets. We have, for example, the Italian ETF. This tracks the Italy market. It was down about 4% today. And this is how we were in August. You could see we're basically running to major lows. Same with where we are right now. Now we're actually nearing almost 2009 lows in the Italian market. We took a look at Spain. We're below those lows. So this is, this can turn into quite a major sell-off in U.S. equity markets. For the fact that people have been, and this is one of the reasons why I was getting long earlier in April and May before I did turn slightly bearish. One of the reasons was the U.S. equity market is basically the most bullish equity market in the world right now. It's just the safest place if you want to put your money in equities. So basically what we've been seeing is people putting money into U.S. equities and selling out of all global markets. We've seen it in Japan because of their 20-year recession that they're in, and also the earthquake, the tragic earthquake we had in 2011. Then we have obviously Europe, tensions in the Middle East, tensions basically in the Eurozone as a whole. So no one wants to put their money into Europe. No one wants to put their money in Asia and Japan and China, given China's recent economic slowdown. So the U.S. equity market was basically the best place to put your money. Now everyone is in the U.S. equity market because we've had the backstop by the Federal Reserve. We've seen basically a lot of liquidity going into the U.S. market. So now that we're starting to turn around, now that we're starting to fall, these people who are long equity markets are going to have to sell out, and that this can definitely turn into a couple of days of panic selling, which could definitely occur since we're below the 1300 level. So once we get below 1287 and 1275, if we turn negative on the year, that will be a very bearish occurrence, and basically I'm holding short. So I'm short equity right now. I'm also long the VIX. Oil is breaking down. I wish I was short that, but I'm not going to as it breaks to the $90 level. And the $90 level on oil is huge. The fact that we're down there is significant. So bearish risk on assets. Let's see if we can see a further sell-off.